Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Kinahan, Chief Market Strategist over at TD Ameritrade, to discuss the monthly reading of the Investor Movement Index, or the IMX, which is TD Ameritrade's proprietary behavior-based index aggregating Main Street investor positions and activity to measure what investors actually were doing and how they were positioned and responding to the markets. JJ, it's great to see you. Happy New Year. Welcome back to Trade Talks.
Happy New Year, Jill. It's always a pleasure to be on your show. Thank you for having me.
And JJ, to no one's surprise with the volatility that we saw in December, the IMX indicates that investors dialed back their exposure a bit in December.
Yeah, very interesting that our investors dialed back exposure quite a bit, almost 10%, and they sold equities in December. It was obviously an odd month, and I think many people were either taking profits or, for tax purposes, selling some equities. So maybe a little bit more aggressive than I thought they would have. So really interesting to see how this year has started out, that it doesn't look like people have necessarily come back in to buy those names that they may have sold last year either.
Yeah, and it's so interesting. I feel like 2021, towards the end, the IMX readings, we saw more of a mixed bag when it came to the buys and sells. And we certainly saw that with the buy side in terms of what they were picking up in December.
Yeah, it really does show, and we talked a lot about it last year, you and I, and the appeal of the EV space. Well, if you look at the three of the top 5 names that our clients bought in December, it's Rivian, Ford, Tesla. So it does tell you that electrical vehicle space is still one that's very intriguing to the average retail investor, and they're putting their money there. And so, those stocks, as you know, Ford particularly was a favorite for most of the year. Tesla, for a good part of the year, would fall a little bit in and out. And Rivian, since their IPO, has been something that our client base has been very, very intrigued with. Then on top of that, we saw, I thought, the most interesting name in there being PayPal that our clients bought, and then Disney, which does tend to be a perennial favorite anyways, and maybe a little bit on the anticipation that perhaps the parks can get going in a better way in the first quarter of this year.
Right. And equally interesting, JJ, on the sell side, the semis were being sold off. And we saw that, we're seeing that in Nasdaq 100 and sort of that index rotation. But these semis are also the ones that supply the chips to the EV car makers. So it's kind of a split there in the EV space.
Yeah, it really is. Micron and Taiwan Semiconductor kind of leading the way there in terms of names that our clients were selling overall last year. I thought one of the interesting names, being actually driven quite a bit by our millennial clients, Jill, was Zoom. As people, I think, have this, even though the Omicron variant hit, you got to remember it hit at the very end of December, so it might not necessarily have all those factors into people's investments the last week of the year, as that sort of changed the outlook particularly. But as people expected perhaps to go back to work in early January, Zoom being one that fell out of favor.
Right. And looking forward here, do you expect to see some more of this volatility play out in January? Because we're also, butting right up to earnings season as well.
Absolutely, I do, Jill. And it's going to be really interesting to see what the CEOs have to say in their comments, of course, about the earnings that just passed, but, more importantly, about what they see in terms of their own workers. This week we'll get the financials at the end of the week. So it'll be interesting to see about the cost of labor also, because that's an area that's usually one of the highest costs, as well as the cost of keeping up with some of the fintech from an infrastructure point of view. Then the second, part of that, not so much for the financials, but certainly for many of the other companies, is how is this Omicron variant and the supply chain affecting the ability to get goods to customers, and how long is that effect expected to stay in place if it is, as we expect, still a major factor.
Right. And that's a great point that you make, that, okay, we know we're going to get reports for the fourth quarter, but some of that guidance for Q1, we saw it this morning with Lulu making comments that they expect to see a little bit of, negativity in the first quarter. Not only do you have Omicron with shoppers perhaps not going to the malls as much, but they also have had to have shortened hours with not as many employees being able to show up for work. So I think it's going to impact the retailers and their guidance going forward. I mean, the fact of the matter is you had less hours to sell and less people to man the stores.
Well, and I do think that Taiwan Semiconductor this morning actually, said that their December went much better than the year before, part of it being for exactly what you're saying, the price of what they have is actually increasing in terms of chips, and there are supply chain issues. And so with that, they're getting, for them, a good double whammy in terms of what's going on price-wise. How many other input companies like that are going to get the short-term benefit of that? But let's face it, longer term, that's not a good business model.
Right. And we'll know more about that in February when we catch up next, JJ. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.